This week, Ben and I are talking about a flip of the calendar into the new marketing year and where the U.S. generally sits on the export and trade pictures. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Doing great. How are you today, Will? Did you have a good Labor Day?
Had a good Labor Day, although, I can feel myself like creep older and older. Went out for just a little while yesterday afternoon, was in bed by 10 p.m. I woke up this morning. I'm like, ooh, I don't feel as whippy as I used to, but it is what it is.
Sounds good. Yeah. It was beautiful here. Like we couldn't have asked for just a more perfect day. And so I spent the day getting my yard ready for, fall overseeding and, trying to get just everything ready in the yard for, the upcoming winter months. So yeah, it was fun. It was a good day to do that.
There you go. There you go. No, I was looking at what to expect down here in Austin for the first year, living in Texas. And I was like, all right, so it's not supposed to get to the average high being below 80 until like November. I'm like, oh, okay, fun stuff. But anyway, talk about some things that have crept up a little higher week over week. We did see a little bit of rebound, some strength in the marketplace. Not too heavy, but a little bit of positive action. So looking at that December 2024 corn contract up 15 cents at 401, December 2025 up 8 cents at 438. That November 24 soybean contract up 20 cents at $10 even. And then soybeans for the 2025 November contract up 15 cents at 10.45. Soybean oil on a cents per pound basis for December moved 1.24 cents higher at 41.99. That 2024 wheat crop for December up 27 cents at 5.52. Looking at October cotton for 2024 down 1.43 cents at 69.15. And then that West Texas Intermediate crude oil contract down $3.59 a barrel at 73.83. So Ben, some light movement overall in the week coming out of that holiday shortened, or I guess this holiday shortened week now, the day off on Monday. What are your expectations moving forward?
Well, sure. If you're a cotton producer, you're probably not happy with seeing that cotton price continuously drift lower. But for everybody else, this is about as good of a week as we could have asked for here in late August, early September. Dryness and heat across a good chunk of the Midwest last week helped rally, our corn and soybean markets. Wheat kind of went with them as well. And, the expectation is that, unless we get some moisture, maybe, or the other flip side of this is the likelihood of an early frost. These clear nights certainly help drop the temperature a little bit, they create the environment to where we can get real low during the nighttime pretty quick. And so there is concern that an early frost might, shorten this development period here late in the season. And that's what helped get us a nice little rally in some of our markets this last week.
And just looking at kind of the expectations, like crop production expectations this year have been at record levels in a lot of different areas. So anything that could dampen that a little bit, you might see adjusting the market pretty quickly. As we kind of round out this growing season, start transitioning into the harvest time. But Ben, one things that we did we kind of flipped the calendar into a new marketing year. And some of the discussion points that you've had and that you've been talking about is the expected trade deficit growth that's to come this year, moving up to $42.5 billion from the revised $30.5 billion. And that seems like a big number just on paper. How substantial is this, shift in deficit for U.S. ag trade?
Yeah, so it is a big number. Billions is those are big numbers. Millions are big numbers, to be truthful as well. And I look at those trade numbers, and we're not used to historically having a trade deficit in U.S. ag commodities. We've kind of been drifting this way over the last several years as U.S. consumers buy a lot of imported, specialty products. Wines in some cases, right, out of certain regions of the world, fruit and vegetables, different things like that, right? Like it's not just corn and soybeans that are included in these numbers, it's everything. And we do buy a lot of products that we don't produce here in the US. Part of what's driven, I think, some of the revisions here as of late is for a lot of our commodities that we export a high percentage of, the price of those have fallen. Corn, soybeans, cotton, pork, right? Like all those are down. We do export some beef, but we also import some beef. And even though beef prices are high, that category isn't, or let's just say that category right now is kind of outweighing itself in these numbers. So beef, we're exporting some, but we're also importing some. That kind of cancels each other out in some ways, right? The other thing I would just say here is that we did see the 2023-24 numbers revised $3 billion lower as well. Most of that was an expected decline by Chinese imports as well. So big numbers. This is kind of continuing this trend of an expanding ag trade deficit, and certainly as some of our core commodities that we export a lot of have fallen in price, we expect that value to also fall in the year ahead.
Well, Ben, it seems like we're coming out of a situation where it already seems like a large deficit, but the projected increase seems a huge step into that deficit as well. So I guess how are these expectations calculated? What goes all into that? You talked about all the different commodities, but how are these estimates arrived at, and how impactful is it that that number's out there?
Well, like all estimates, there's a variety of assumptions that are made. So I'm not going to say that any estimate is ever perfect. And, I think all of us would be first to admit that we make mistakes and things change.
No, never.
I know, right? Like it's part of the process here. It's a very humbling business. So the way these trade estimates are really designed is, it's a function of every single commodity supply and demand factors, not only here in the U.S., but around the world. How much we think we can export as a country, given what other available supplies are on the world market, times a price. And so in some cases, right, like the estimating comes on, the production side of the equation, right? Like how much is going to get produced in a part of the world. And the price is estimated from that, right? After you get the estimates of how much each country is going to produce or consume, and then that price, the rest of it's just kind of simple accounting, right? It's how much we expect to bring in or sell times the price of that product, and then additions and subtractions across the board, right? So it's kind of accounting 101. My farm management students don't necessarily like accounting, but that's kind of what it is. It's just an addition and subtraction of these balances once we get those estimates calculated.
Well, looking at as we're now moving into this new marketing year, the trade exports, U.S. exports of ag products have been sluggish. Inspections have been sluggish over the last year. What are your expectations now that we flip this calendar, just moving forward? What opportunities might be out there?
Well, certainly, I think there's room for exports to really drive markets higher in some categories. I'm going to talk about corn for just a second. I think the year ahead, 2024-25, could be a very strong year for corn exports. I think there's demand in the world for our product. I think, this is the second consecutive 15 billion bushel corn crop for the U.S. So we have supply to ship. And I think that's going to lead us to, see ourselves finding some markets that maybe wouldn't have come to the United States just because we have the product. We're going to be price competitive in that market. 2023-24, which is the marketing year we just finished, our corn exports were up year over year pretty substantially. And we saw some key markets really grow for us. Mexico, for instance, if we look at Mexico relative to the previous 5-year marketing years, Mexico imported 272 million bushels more than what they normally do. That might not sound like a lot, but 272 million additional bushels to one country is certainly positive. The flip side of that is we continue to struggle in China, and we could say this across all of our commodities. When I look at corn, we're down in corn exports to China. We're down in soybean exports to China. And so it continuously we continuously beat this drum of we export a lot to China because China is a big country, and there's very few other countries that can pick up the slack
Match
that
that
China
demand.
requires. In fact, there are no other countries, and so you have to bring in a whole bunch of small countries or smaller countries to kind of make up for what
You have to
we've
play
started to
Oakland
see.
A's Moneyball basically and recreate.
Yeah, yeah, yeah,
Yeah.
yeah. So, and just to give you, I pulled up, I realized I didn't have the percentages here in front of me, so I just pulled them up real quick. To give you an example, this year in corn exports to China relative to the 5 previous years, we're down 65% in corn exports into China. For soybeans, we're down 7% into the Chinese market. Wheat exports down 71% into China. Grain sorghum's actually up. We've had a very good year of grain sorghum exports into the Chinese market. And then cotton, we're also up currently into the Chinese market for cotton exports, but we're down everywhere else.
Everywhere else, yeah.
Yeah, all the other countries were down, all those Southeast Asia countries. And so,
yeah. It seems like the bottom line is the only one that you at least have an overall positive picture is that corn sector for the most part. Everywhere else, there's some silver linings, but overall it feels like, a losing fight at the moment.
Sure. Yeah. It's
So
been a rough go.
Been a bit, yeah, of a rough go. But, moving forward, I guess immediately looking at this market, we've been talking about kind of the depressed prices within the market for the last several weeks. But moving forward, is there anything that you would expect to have an initial impact on the markets as we move into this harvest type of season? Anything that farmers and ranchers really need to be paying attention to?
Well, so we are getting really close to harvest. Some places, even within Missouri, are harvesting, a week or so into harvest at this point. And so it'll be interesting to see how the markets react. There's a general, I think, perception that the harvest lows have passed us. Truthfully, I don't know if they have or not. It's statistically, right? Like if we think about the period of the year where we normally see the harvest lows, it's somewhere between September and late October. So, we could be seeing the harvest lows behind us. The expectation, though, was that this is a big crop. I think there's still general consensus this is a big crop, but if those combines get rolling in the fields, just like every year, if we get into the field and we start realizing that there's maybe some more problems out there than what we initially thought, or if we get a early freeze, I talked about those clear nights that allow temperatures to drop. That could provide a little bit of a bullish rally here for us. Really, as harvest gets going, and so I think that's something to be on the lookout for. It's not something I'm anticipating or expecting, but certainly a possibility.
All right, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.